Well, it turned out to be another bad day for markets, partly because more people are worried that interest rates might remain higher for longer. The share market fell by 0.6% today, and during this shortened trading week, it's lost 1.6%, or $42 billion in market value. Petrol stocks like Ampol and Viva Energy held up better than most, while miners and tech firms were today's worst performers. Basically, it's another case of when America sneezes, the world catches a cold. There were some pretty big falls on Wall Street this morning, which spread to Asian markets. And the reason seems to be this guy, Neel Kashkari, who's head of the Federal Reserve Bank in Minneapolis. Markets are hypersensitive to any comments about interest rates these days. This morning, he questioned whether rate cuts will even be necessary this year, given inflation is still pretty high. And lately, markets have really changed their minds on how many rate cuts might happen in the US these next few months. In January, 6 rate cuts were priced in, as you can see from the blue line. Today, just 3 cuts, as the red line shows. Similar story for Australia. Markets are now speculating the Reserve Bank will cut rates just once before Christmas instead of 2 or 3 times, as the jobs market and house prices have been holding up a lot better than expected. Meanwhile, oil prices have jumped to an almost 6-month high, which will lead to higher petrol prices, unfortunately, while gold has fallen from its record high. And the Aussie dollar is down to 65.7 US cents. And that's finance.